In his interim budget speech today, Finance Minister Pravin Gordhan was at pains to stress the sustainability of South Africa's fiscal position. He and his department clearly are still smarting from the decision by two major ratings agencies to downgrade South Africa's sovereign debt rating. In studio and elsewhere to assess his performance and the content of his speech are Des Kruger, Director of Tax at Ernst & Young, Peter Tardman-Talto, emerging markets economist at Nomura, he's in London, and we also have Stephen Charles, head of forex rates and market making at RMB, and Nicholas Soro, portfolio manager at Sasfin Securities. So a wide range of experts, tax, economics, forex, and the equity market. Welcome, gentlemen. Really good to have you here. Peter, Todd, I'm going to get your views from London, your perspective, your big picture perspective. Were you convinced by Finance Minister Pravin Gordhan insisting that we are on the right path? We certainly aren't imploding. And as I'm sure you had the impression too, he was speaking to the ratings agencies.
Exactly, firing a warning shot towards the rating agencies, to the ANC, and to the market as well, in terms of the fact that the National Treasury basically has the budget process under control. Freezing expenditure allocations is what they were in the February budget, was probably one of the largest announcements, and making some broadly realistic assumptions around revenue falls, particularly in the short run, and hence a more realistic revenue path, deficit path that the market was happy with. But interestingly, obviously paying for that, we're drawing down cash deposits at a faster rate and not really changing domestic issuance that much. So overall, hitting the right buttons for the market, and hence no particularly dramatic move in either the debt or FX after the announcement.
Des, amongst other comments and announcement was the fact that in this fiscal year, the tax take is as 5 billion rand lower than what was estimated in February. Certainly no surprises there, given the weakness in the economy, so lower GDP base, less to take home. And he said at least twice, but easily more than that, that they are not going to change the spending plans and everything's still on track. Just your comment on the tax side and what you've seen from the corporate side, your clients and the ability to pay more tax in the years ahead.
Yeah, thank you. I think it's important to have a look at how those reductions pan out, because it's not as one would expect across the board. The major reduction that they're budgeting for is in fact at personal income tax level at nearly 4 billion. And then corporate tax reduction as well of nearly 2 billion, and fuel levy. So adding up to quite a significant reduction in those revenue sources, and then an increase budgeted for VAT quite significantly. So it's a bit strange that we're going to have less money going into people's pockets in terms of personal income tax, but that we're budgeting for a significant increase in VAT receipts. So an interesting mix of where we, where they expect the, the reduction or the reduction in the economic activity to take place and that sort of stuff. And it's expected, as one can, given the present state of affairs of the country and in the world. So yeah, we were expecting a reduction, and obviously that's going to give rise to greater borrowings and that sort of thing. What's interesting from a point of view of collections is that we continue to budget for increases of 11% in nominal terms per year. And the ministers put that down to better compliance by taxpayers and that sort of thing. And I think that's probably true as well. I think there's been an increase in compliance, and I think SARS has been doing a great job.
Well, Finance Minister Pravin Gordhan has predicted that the budget deficit will widen over this period for the 2012-13 year. Instead of 4.6% of GDP, it'll be 4.8%, and the following year 4.5% instead of 4%. Let's have a look at what he said.
Export volumes contracted at an annual rate of 6% in the second quarter of 2012, after falling by 1.5% in the first quarter. Import volumes are now almost 4% above pre-crisis highs, while exports are still well below their peak, contributing to the widening current account deficit.
Stephen Charles, if you look at the market reaction to this, it was rather muted. But we know in the run-up to this that the yield curve on the South African bond market, the yield curve steepened. So factoring in bad news and the government's need to come to the market and raise more capital, Pravin Gordhan made it very clear that they will not be coming to the market. So nothing's changed there. So the way I look at it, if it was a no response, there was no correction of that steepening of the yield curve, to me, that's in fact a negative response.
Yes, the 100 billion of funding is essentially priced into the market, and we've been really spoilt up to now with the foreign demand. So foreign investors have been happy with what they've seen in South Africa. They're happy with our yield, but it's really fundamental driven. So the strikes that we've seen in the last month, we've hit a bit of a speed wobble. We've seen this week really muted demand from offshore. They're not investing. We're not seeing the fixed investment. The foreign investment is seen through the debt market. So yes, we need to make sure that we're really keeping a handle on fundamentals. That investment is very important. Steeper the curve, the more expensive it is to borrow, and then the more they need to borrow.
Yes. So that's different deficits here. He was talking about the current account deficit. I was asking you about commenting on the budget deficit. So that current account deficit, that gaping amount that needs to be funded with these foreign inflows, and the question, of course, is as that current account deficit, our balance with the rest of the world increases, a greater reliance, greater vulnerability to foreign sentiment.
Very much so. I think what was positive from his comments today is really sober about what's going on in the economy, and I think that honesty is important. When you're in denial, your investors think, well, you're not going to fix it.
Yes.
So the honesty, I think, is a good starting point, and we hope that the market's listening. We hope that the politicians are listening.
Yes.
Because your investors definitely are.
And that honesty came through in Pravin Gordhan's comments on GDP growth. He shaved our GDP growth prospects. Let's have a look at that.
As the global economy recovers, we expect to see South Africa's growth improve over the next few years. Real GDP growth of 3% is forecast for 2013, rising to 4.1% in 2015.
Nicholas Sorrell, so we knew that was definitely priced in the fact that everyone, economists everywhere, including even the ratings agencies, are expecting lower economic growth. For the equity markets, we've seen this ongoing disjuncture, separation between what's happening on our market, all-time highs, and a faltering economy.
Look, it's a good point. I mean, the Johannesburg Stock Exchange didn't do anything today. I mean, it flatlined throughout the speech. It only started to dip late in the afternoon away after the speech was finished. It indicates again that the South African market is very aware of what's happening locally. However, they take a cue from what's happening offshore. We need to understand that almost 70% of our top 40 in one way or another is connected to what's happening offshore, specifically what's happening with Iran, what's happening with equity markets. And that's exactly why our GDP is coming down. It's because we are reacting as an economy to the downturn that we are seeing worldwide. We're seeing our main trading partner, Europe, having very, very low growth rates. I mean, they're literally on the precipice of a recession. We're seeing other trade partners in America and in China also coming off tremendously. So that's affecting our exports. We have local issues as well, with mines under tremendous pressure from a labor perspective as well as a cost push perspective as well. I mean, recently with Eskom's requirements of asking for a price hike of 16% year on year for the next 5 years. These things all add up and they all have an effect. So, the budget speech was fair, it was interesting, it was very feel-good, happy feelings of what we can do. But there's a lot of action that needs to take place first before we can actually see any real benefit at the moment. So it wasn't much reaction in my opinion, humbly. Yeah.
And certainly a common theme was that he insisted that revenue, he pointed out that revenue would be lower, let's have a look at what he said. Let's see what's in that clip.
The revenue target has been revised marginally downwards by 5 billion rands to 821.4 billion rands for the 2012-13 year due to slower than anticipated growth. To date, SARS has collected 402 billion rands and is on track to meet this revised target. The consolidated revenue estimate for this year, that is the tax revenue and other revenue that the state gets, is 901 billion rands, or 7.6% more than the 2011-12 outcome. Payments to our South African Customs Union partners increased from 22 billion last year to 42 billion this year, and are projected to go up to 44 billion rands next year. These are the contributions we make to the SACU countries. The consolidated revenue projection for next year is 986 billion rands, or 27.5% of GDP, of which 901 billion rands is the tax revenue share. Total revenue is budgeted to rise to 1.2 trillion rands in 2015-16. Growth in tax revenue is thanks to steady improvements in compliance of South Africa's taxpayers.
Peter Montalto in London. So there's a great emphasis also on efficiencies, and this has been a theme for a number of years now from Minister Pravin Gordhan. Has that been convincing? Has there indeed been progress on spending in the right way and spending without the corruption?
Well, I think there has definitely been some improvement on that front, and we've seen it come through in the last 2 years in terms of the details of the budget. But another chunk of savings found in this budget as well, which help us to get to the deficit numbers that Pravin Gordhan announced without blowing out too much on that front. I think we're probably reaching the limit here, really, of what the National Treasury can meaningfully achieve going forward, and hence the long-term risks around the budget. You need to be making a more serious rotation away from some of the current spending and into capital. We did see that penciled in today in the budget, but we should remember still that a large amount of the budget expenditure does go to the provinces, does go to local government, where the issues of efficiency and corruption are actually highest. It's not really the central government where the concern is there. It's once the money leaves the central government and goes out into the regions.
Des Kruger, our tax specialist from Ernst & Young, he's in Cape Town. Des, no mention of this carbon tax, for instance, no mention of taxes increasing, so no new taxes, no tax increases. We know this is not the forum for it, but it might be the place where he could have offered some guidance. What's your expectation for February in this regard?
I think I agree with you. We haven't really come to expect any great shakes regarding tax at the midterm budget. It really all happens in the February budget. But then again, it's also good news that it's steady as she goes, because there are expectations, with the budget deficits and that sort of stuff. Maybe we're looking for additional sources of revenue. It could be announcements around increases in rates. But yeah, as you say, I mean, there was no great expectations that there were going to be major changes. I think the major changes were announced in February. We've seen quite a significant tax bill recently tabled in Parliament, and that's the major impact, and that's where the tinkering is taking place with the tax system. But steady as she goes, and I think that itself is good news for business, that we know where we are, we know what to expect. All the thoughts around what there may be increases, there may be a new tax, carbon tax, this tax, and that sort of stuff. We can at least rest until next year, and then we can expect some changes again, I imagine.